Okay, so the analysis we're looking at details the huge 104% surge in PLRZ stock. It's driven by some positive preclinical data on its trap and target tech and what looks like a bullish technical setup.
Right. And it's a punchy report for sure. It really captures that up 104% in one day feeling. But that kind of momentum can, vanish.
It can.
So I think the first big area to strengthen is this disconnect between the short-term trading volatility and the very, very long clinical timeline ahead.
Yeah, that's a key theme here. I mean, the analysis does a great job with the technicals. It nails the low float plus high volume setup. It calls out the 1820 resistance, the 1250 support.
It does. That part's sharp.
And that really creates this sense of urgency for a trader.
But here's the weakness. That intense focus on the immediate trade, it just minimizes the massive inherent risks of early-stage biotech.
Right, we're talking about human trials that are expected to start in 2026.
2026.
Exactly. So the whole investment thesis gets blurry. Is this a multi-day runner? A 2-day trade? Or is it a stock where the $14 price might look cheap in 6 months? You can't have it both ways. It shoves a 3-year clinical path into a 6-month valuation window.
And that creates a huge execution risk gap that the analysis just doesn't really get into. It's confusing for the investor. Are we trading or are we investing?
So what's the suggestion then?
Well, you have to clearly delineate the two. Build a wall between the technical, momentum-based trade and the long-term fundamental value proposition.
Give the reader a clear map of the risks for each.
Exactly. And if the core tech is really that strong, the analysis has to explain how the company sustains that excitement. What keeps the valuation up for the 1 or 2 years before that 2026 milestone?
Okay, so a concrete example could be a new section, something like a risk versus reward timeline.
Yes.
Not just generic biotech risks, but explicitly addressing the money. What's the burn rate? Do they have enough cash to get to 2026?
Because if they have to do another offering, this whole valuation story changes overnight.
Right. Or here's another thought. What's the real cost of failing to hold that 1450 close? What does that do to shareholder confidence? Does the whole story just, break?
That's a great point. Grounding the risk in those specific technical levels would make it so much more credible.
And to give some fundamental support during that long wait, the report could specify some interim milestones. Things that aren't the big clinical trial.
Non-clinical milestones.
Yeah.
Are there toxicology reports coming? Pre-IND meetings with the FDA? Something tangible the market can track besides just chart patterns?
Perfect. And that brings us to the second big point, which is really the heart of this whole thing, the science.
The trap and target platform itself.
We absolutely have to deepen the scientific validation there.
Okay, so the analysis makes a strong case that the tech is powerful. It points to the preclinical data for the naloxone hydrogel.
Right. The claim that it sticks to nasal tissue significantly longer than current market leaders.
And that one claim, that superior mucoadhesion, is basically presented as the ultimate validation for the entire tech stack. And there's the weakness. It's a huge claim, but significantly longer. Well, what does that mean?
How much longer?
Exactly. How much longer? And what's the clinical significance of that? Especially when you're making a potentially life-saving reliability claim, the science is getting treated with less rigor than the intraday chart patterns.
That's a huge gap. If the tech is why the stock is up 104%, you have to treat that data with the same precision as the technicals.
So the suggestion is that the analysis has to anchor these scientific claims to measurable metrics. And, what's the regulatory context? We need numbers, not just adjectives.
That's very actionable. So for example, the analysis could just research it. What's the typical retention time for something like Narcan?
Right.
If Narcan lasts 5 minutes and PLRZ lasts 15, well, that's a 300% improvement. Now you have a verifiable reason for the stock move.
And it makes that life-saving reliability claim suddenly feel very real.
Another way to do it, they mention the manufacturing scale-up for the allergy blocker, PL14.
They do, but only in passing.
Right, but that's a gold mine for de-risking the platform. Use it to show that the trap and target system works in a totally different therapeutic area.
Ah, I see where you're going. It proves versatility. If the same core mechanism works for an opioid antagonist and an allergy blocker.
It shows it's a real platform, not just a one-off success.
Which is exactly what a potential partner wants to see. And one last idea on the science. If that better adhesion gives them a real regulatory edge, like maybe they can use a smaller dose or it absorbs faster?
Then you have to spell that out. That's what separates a good report from a great one.
Precisely. And that moves us right into our third point, the market.
Expanding the market, context, and the competitive landscape.
Because the analysis just asserts that the company is now on the map for big pharma partnerships.
Which sounds great.
It does. But what map are we talking about? That's the core weakness. The claim has no grounding because the report gives zero definition of the competitive environment.
It just uses the small market cap, under 20 million, as the reason for future growth. The logic is basically, it's small, so it must get bigger.
But it doesn't define the size of the opportunity. It doesn't name a single competitor in the opioid reversal or allergy blocker space.
And that makes the partnership claim feel like, well, just speculation. Why would Big Pharma choose PLRZ over any other existing technology? We have no idea.
So the suggestion has to be to introduce some specific benchmarks. What's the total addressable market? What's the potential ROI for a partner?
You have to define the market to justify the growth potential. Give a potential acquirer a reason why this low valuation is so attractive.
And to make it concrete, you should just name the big players. Who dominates the nasal delivery space right now?
Because those companies are either your logical partners
Or your prime competitors.
Exactly. Naming them adds instant credibility. If you can say, Company X has 60% of the market, their delivery patent is expiring, and PLRZ has a 300% better system, well, that's a story that writes itself.
And going back to the allergy blocker for a second?
You have to leverage that commercially here.
Yes. Quantify the market size for that segment. It shows potential partners that there are multiple revenue streams, not just the volatile emergency use market.
It shifts the entire story from a bet on one drug to a bet on a validated, versatile platform.
And one last thing, to really ground the valuation, right now it's all about momentum charts. A comparative analysis would be huge.
I like that. So compare PLRZ's valuation to other preclinical biotechs in the same nasal delivery field.
Is a $20 million market cap actually cheap for this stage, or is it typical? If its peers are trading at $50 million, the 104% surge looks justified. If they're at $10 million,
Then you need a much stronger argument for the current price. Context is everything.
it is.
So to summarize,